Your thoughts on the session? Not a bad way to start a short week.
It's not a bad way, especially given that last week was the fourth consecutive week of losses for the Aussie market, and we were down 3.8%, but not as good as we could have been. We saw a rise of 0.4%, and remembering that the US stock market managed to gain 1.25% while we were closed, I guess the Australian market underperformed. Part of that was that we did see Chinese data coming out while the Australian market has been closed. We did see industrial production numbers coming in lower than expected at 9.2%, and exports are the lowest that they've been in around about 10 months. Imports also low, and we saw new yuan loans also falling. So that seemed to have an impact in terms of the Aussie market, especially the material sector, which underperformed today. Domestically, we saw the business confidence and condition numbers, and business conditions still a -4, so still remaining quite soft, although we saw an improvement, and confidence at -1. So I guess if we have a look at these numbers, the Aussie dollar is still coming under pressure at a 33-month low today. On the technical side, we have bounced off the 200-day moving average, so still watching that mark very closely. That's at 4,742 points, and we did briefly dip below that during the session, but managed to see a rise there shortly afterwards. So that's an important level for this week that we're watching. But on the positive side, healthcare stocks really did outperform today. That was helped by Ramsay Healthcare, which saw a gain of 3.5% after an acquisition in France, and Certex up a massive 6.3%. Now this is a stock that's up 101% over the last 52 weeks. So all in all, a good session by the Australian share market, but not as good as we could have been given the leads that we had seen from the US.
Opportunity is presenting itself at the moment with this sort of sharp sell-off we've seen in recent weeks?
Well, usually when we do see pullbacks, they come back to the 200-day moving average line and then see a bounce. So indeed, if we do see that case, then we could be looking at the bottom of the market at these levels. Of course, it is an important technical level, so a breach of that would throw that argument out the window. But we have seen a significant pullback now for Australian shares, and I think the yield play is still there, especially given that the pullback that we have seen in prices now, and that interest rates are still forecast to fall even further. I guess if we have a look at the market overall, we did see quite a bit of volume coming through, and that's a good sign as well. $4.3 billion being traded on the first trading day of the week after a long weekend. So there's some decent volumes coming through, and I guess some decent activity. We saw the largest IPO yet of 2013, and that was a good debut as well. So hopefully that's a sign of confidence and a sign of more.
Speaking about it all day, another profit downgrade from a mining services company. It was interesting to see the reaction on market. They opened up close down to 12% or so, but in the end settled, I think, about 6.5% lower in the end. So obviously there was a little bit of support kick in there.
I mean, we were talking about themes on the market, and Newcrest and the gold price sell down, as well as the problems that it's had, and it's very difficult to battle against the theme. And one of the themes that we've definitely been in over the last 6 weeks is a massive downgrade cycle that we have seen from the mining services space. Stocks like Coffee, United Group, Boat Longyear, just to name a few, Transfield as well. So looking at these type of stocks, and I guess not a huge surprise to the market that we've seen NRW coming out. Now we have seen a downgrade in the form of a revenue downgrade as well as profit and margin, and we knew that one of the things coming out of this capex contraction that we're going to see, or the capex cliff, is that we would see these mining services companies see their margins coming under pressure. So NRW previously was forecasting back in February a 6% margin. They're now forecasting 5.6 to 5.8% margin, and of course there's an effect in terms of the profit as well. So in the end, the share's down by about 6.5%, and while that doesn't seem like a massive reaction given the huge share price reactions that we've seen from other mining services companies when they have come out with a downgrade, I guess to put into perspective, NRW still has been sold down before this downgrade came through, and the stock's actually down 50% in the last 3 months. So I think a lot of it may have already been priced into the stock given the raft of downgrades that we have seen from this space. So down 6.5%, but over the last quarter down by 50%.
What do you think the future holds for this stock, Julia?
I guess if we have a look at the light at the end of the tunnel, when we do see a massive downgrade cycle like this, the turning point comes when you see an inflection point, or I guess an upgrade cycle coming through. And while a lot of these stocks look cheap on revenue or on profit, I guess the big problem is what's going to turn it around. And the key there lies in terms of the commodity space and in terms of China. So China at the moment is forecasting 7% growth over the next 10 years. I guess if we have a look at what might change the perspective in terms of the mining services space, is if we do start to see support for commodity prices and see high growth rates coming out of China, and that may flip the story. But at the moment, the consensus view is that we'll continue to see a difficult time. We're still seeing cuts in terms of spending coming out of the miners. So unfortunately, no light at the end of the tunnel, even though value does seem to be there. And I think the inflection point really comes when we do start to see an upgrade cycle at least possible.